What's up guys? It's me and welcome back to my channel where you subscribe for weekly crypto investing tips. In today's video, we're going to be discussing a very important topic, especially in times like these. We're going to talk about how to avoid FOMO, or the fear of missing out. So many investors fall prey to it, and it can absolutely ruin your portfolio. First off, if you haven't already done so, hit that like button. It really helps the algorithm and allows us to put out more great content for you guys. And secondly, stick around until the end of the video, because I've got some bonus points for you that I think will help immensely on your investment journey. So let's begin. Bitcoin is pumping, altcoins are flying, your social media feed is full of people bragging about their gains. That sinking feeling in your stomach? That's FOMO, the fear of missing out. In this video, we'll talk about how to avoid FOMO and make smarter investment decisions when the market is going crazy. Before we get started, I want you to understand that the market goes through cycles. The price goes up and the price goes down. This is nothing new, it's nothing shocking, but it's our job as investors to take advantage of those down moments when things are cheap. So it is incredibly important that you do not panic sell when the markets are down, and you do not panic buy when the markets are up. So let's start off with what is FOMO. FOMO happens when you feel pressured to jump into an asset just because it's rising fast. Instead of sticking to your strategy, you panic buy at inflated prices. In crypto, FOMO is dangerous because pumps are often followed by brutal dumps. Many beginners end up buying the top and watching their portfolio crash within days. Next, let's talk about why FOMO is so dangerous. There are three main reasons. First, you buy high instead of low. This is the most obvious. When you succumb to FOMO, you're buying at the peak of a price movement when it's trading at a high value. You're not getting a good deal. Instead of buying low and selling high, you're doing the opposite. You're buying high and hopefully not selling too high. But chances are you will be caught in a dump and you'll be selling low. Secondly, you ignore risk management and position sizing. To fight FOMO, you need a plan. How much am I investing? Which coins am I buying? What's my stop loss? If you don't have these questions answered in advance, you're at risk of making emotional decisions that you'll later regret. Finally, thirdly, you trade based on emotion, not logic. In short, FOMO turns investing into gambling. And in crypto, that almost always ends badly. Now let's move on to recognizing the triggers. To fight FOMO, you first need to recognize its triggers. And there are four main triggers that you should look out for. First, social media hype. Be cautious of influencers shouting this coin will 10x, this project is the next big thing, or other similar hype. Remember, if everyone is talking about a coin, the biggest gains are probably behind you. Second, price chart going parabolic. It's tempting to chase a rising chart, but zoom out to see the bigger picture. Is it a small altcoin on a tiny exchange? The parabolic move might be a pump and dump. Third, friends or communities bragging about profits. While it's great to share wins, it's also important to stay focused on your own plan. Don't let others' excitement sway you from your strategy. Finally, fourth, headlines claiming a new bull run has begun. Media hype can push markets higher, but also remember that every bull run eventually ends and a bear comes after. Next, let's talk about how to avoid falling for FOMO traps. Let's go over some practical strategies that you can implement immediately. First, stick to your DCA plan. DCA stands for dollar cost averaging. Decide how much you'll invest and when you'll buy it, then stick to that schedule. Whether the price is low or high, your plan should be your North Star. Next, set entry rules in advance. Don't wait until the hype hits. Decide your buy zones before the pump happens. This way you won't be pressured to buy at the peak. Then focus on your long-term goals. Ask yourself, is this decision for my 5-year plan or someone else's 1-week plan? Long-term goals help you weather the short-term noise. And finally, keep cash reserves. It's okay to hold cash, especially when the markets are going crazy. That way you won't feel pressured to chase pumps. You're always ready for better opportunities. And now let's look at a practical example. Let's say you're tracking Bitcoin. You decide to buy at $40,000. However, while you're waiting for the price to dip, the price takes off. Your FOMO is starting to rise. Remember your plan. Are you going to deviate from it because you're seeing other people make gains? No, because that's what FOMO makes you do. You deviate from your plan. Instead, stick to your DCA strategy. Buy your regular amount on your scheduled day, regardless of the price. If it's $40,000, buy. If it's $60,000, buy. Just stick to your strategy and keep investing. Next, let's discuss some common mistakes that lead to FOMO and how to avoid them. Mistake no. 1 is buying every green candle. Don't buy something just because it's moving up. Understand the project and its potential before investing. Otherwise, you might miss out on the real gems that are flying under the radar. Mistake no. 2 is selling your strong assets. It's tempting to sell your stable blue chips to chase a pumping altcoin, but that's like swapping a Ferrari for a Ford Fiesta just because it's going fast. You're trading potential for hype. And mistake no. 3 is over-leveraging because this time, it's different. Don't fall for this trap. Leverage can turn small gains into big losses fast. In a volatile market, it's a risky move that often leads to regret. Finally, let's wrap up the discussion. Look, FOMO will always be around. It's part of the investing landscape, but you don't have to let it control you. Stay calm and collected. Ask yourself, does this decision align with my strategy and goals? If the answer is yes, go ahead. If not, hold on to your cash and wait for better opportunities. Remember, investing isn't about chasing the latest trends or making quick bucks. It's about making smart choices that align with your financial goals and staying the course. Alright, that's it for today's video. Thank you guys so much for watching. I hope you enjoyed it and learned something new. Don't forget to like this video. Hit the subscribe button so you never miss out on any future uploads. We publish weekly content so you always have fresh insights and tips on crypto investing. Head over to our website to find more resources and articles that can help you on your crypto journey. Remember, in the world of crypto, patience, research, and a well-thought-out strategy are your best friends. They can help you navigate through the highs and lows of this exciting market. Take care and happy investing.